Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Happy Friday. In the S&P, bouncing off major three-star support this morning. Early this morning before the bell, 2710, 2711 is our level. And hit a low at 27.08 and started ripping up after Dallas Fed President Kaplan started talking about growth headwinds. We're starting to see this come from the Fed over the recent days. Fed Chair Powell himself talking about overall headwinds globally, slowing down that strong U.S. growth. Fed Governor Clarida today talking about being data dependent. His rhetoric has been wanting to see the numbers, and guess what? CPI, that core year-over-year number earlier this week, missed or came in soft against expectations for the third straight month in a row. Overnight, we had a big tech stocks pushing lower. Apple was down. Amazon was down. Apple is now up 1.5%. Amazon has pared those losses in half. Nvidia, the chip sector, has been crushed with weak growth outlooks, but Nvidia is still down at 17%, and the Nasdaq is still in the red. So watch here for today. The S&P is hitting up against major three-star resistance. We are neutral coming into today. We talked about it in the Morning Express. We did lay some really great levels out there to trade. Go check it out. But we are neutral, and you want to stay nimble. We did say we find value a lot lower in the market. That 2780 area, 2680 area we hit yesterday. That was the buy zone. Now moving on to crude oil. Crude's pushing up against 58 bucks almost. And what are you seeing here? Well, you're starting to see the winding down of that lull season, maintenance season, call it. So this could actually start to have a little more of a bullish effect on the market. Hopefully, maybe next week we see those big builds in crude oil. That big 10 million barrel build in the 8th straight week in a row was the largest. Maybe we can start to see those go away. But that, as well as OPEC, is really starting to lift things. OPEC. Looks like they're going to try and cut here at their next meeting, December 6th, or at least jawbone it into that. So let's see what comes out from that. Again, that jawboning is helping the market lift up a bit. Some resistance that we're testing into right now, and the market hasn't really been able to shoot through that resistance. But 60 bucks is really that area where we want to see this market get to. And for those of you looking to sell, you may want to wait till that can get up to 60. That's where you're going to find the value to sell if you are looking to do that. Now, moving on to gold. Lastly, gold is responding. You have the British pound ripping higher. You have the dollar index moving lower after this Fed comments, but it looks like you got a little bit of soothing on the European trade front with Brexit. Italy stayed out of the headlines as well. So the dollar index against our support we've talked about in the FX rundown. So watch that level. But gold has responded. It is out above the 100-day moving average. So very constructive week for gold. Stay nimble with gold. We like gold long term, but don't get over your heels here if you are buying and adding up at this level. We don't think the real buy may not come until the second half of December, but we like buying dips in gold, and we'll continue to do that. Give us a call. We're here to help. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial or research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.